Hi everyone. So today we'll be covering another topic that is around budget and control. It is also one of the important topics. It's not tested separately; it's tested in subparts of the syllabus. So we'll just right into it. Okay. So firstly, this is for the context of what we'll be covering today. Some key concepts approaches to budgeting, which includes top-down and bottom-up budgeting. Then the types of budgets, variances, and revision of budgets. So I'll quickly move on. So firstly, is a budget. Budget is a qualitative plan prepared for a specific period of time. It is not expressed in financial terms and prepared for 1 year. So that's what the basic definition of budget is. You all should know what it means. Now there are multiple purposes of budgeting, which I have tried jotting down here. So speaking of planning, so planning is a budgeting process that forces the business to look into the future. What are the future prospects for a business? Um, which are also essential for survival. It stops management from relying on ad hoc or poorly coordinated planning. So it helps with the future prospects and it is also essential for survival. So one reason is planning. Another purpose is control because you get to compare actual results versus the budget. So that's how you can see if the performance goals are being achieved or not. There is communication. A budget acts as a method of common communication that allows an engineer staff to communicate. So formal method of communication coordination. So how does the budgetary process helps with coordination is that it allows coordination of all parts of the business towards a common goal. It ensures that all the business units, which are also called SBUs, working towards the common objective or goal. I'm sorry for my handwriting, but I'm trying to improve it. Um, then we have evaluation. So it basically helps in dividing the organization into budget centers, each which has a manager who is responsible for its performance. The budget may be used to evaluate the actions of manager within the business in terms of cost and revenue over which they have control. So here you can see that we can talk about the responsibility, accounting manager who is responsible for its own responsible, or we can say for its own performance. Motivation. Another purpose of budget is motivation as it can be used to target for managers. Okay, fine, if you achieve this target, then your reward will be given to you. So it can do motivation of the manager because they know what they are working towards. Authorization is because it acts as a formal method of authorization for a manager for expenditure, hiring staff, and of plans contained within the budget. They know that okay, fine, this is how much I have to spend, how much I have to invest in my talent. So it is formal, you can say, method of authorization for a manager's expenditure. Delegation. So managers may be involved in setting the budget. Extra responsibility may motivate managers uh, and can also result in more realistic targets. So these are the 8 purposes of budgeting and why organizations set budgets. I hope it's clear. Now we're moving to the different approaches of budgeting. With the first one being the top-down approach and the bottoms-up approach. So, to really explain, I'll tell you both the approaches are. Top-down budgeting is where budgets are prepared centrally, usually by the senior management, and these are imposed on the junior. And bottoms-up budgeting means that junior managers prepare their budgets initially. Finance department and senior management reviews these budgets, and some negotiation before the budget is achieved. So it's a bottoms-up approach. Everyone is involved in the budgeting process, and both have advantages and some disadvantages. So for top-down budgeting, one of the advantage I would say is that it avoids dysfunctional behavior. What is dysfunctional behavior? That budget that is prepared will be consistent with the long-term objectives of the organization. So it's not like that individual objectives will be met; it will be consistent with the overall objectives of the organization. Um, it also avoids budgetary slack, which means that budget will be not manipulated by the managers who are responsible for achieving it because it is coming from the senior management. At the same time, some advantages of bottoms up budgeting would be that motivation. Managers would be motivated that they are part of the budget process and they are being allocated some sort of responsibility. And managers have better knowledge of the circumstances, so they will be in a better position to prepare budgets. Hence, the budgets will be more realistic and achievable. Another advantage will be that it will also improve the quality of decision making. Why? Because individual managers are close to their product markets and know what is the best decision to make. So these are the two approaches. These are tested very regularly. You have to identify that which approach to budgeting the organization is using, and then you have to comment whether it is correct or not, and what are the pros and cons of both approaches. Okay, then there are different types of budgets that an organization has to prepare. Firstly, we have the fixed budget. It is prepared at the beginning of the period based on expected activity levels, which includes the sales union, production units, etc. No adjustment can be made to this budget at the end of the year. When comparing actual performance targets against the budget, this means that the budgeted activity levels may differ significantly from actual activity levels, which can make the comparison pretty meaningless because varying activity levels will incur different costs. Then we have flexible budgets. So several versions of budgets are prepared, and at the end of the year, the budget to the actual level activity level is used to compare the actual results against the budget. So what happens is that this approach the budget realistic because they're flexible. They have that leeway of adjusting the market trends and then incorporating the changes that are happening in the market. Then lastly, we have flex budgets. So at the end of the year, what happens is that before comparing the actual figures against the budget is recalculated using the original budget assumptions at the actual activity level. So for example, if you forecasted that you're gonna sell 100 units of a particular product, but in reality you sold 120, so you will recalculate the budget based on the volume of 120. That will be your activity level, but the cost and price will be the same like you budgeted before. So that's how comparison becomes more valid because you're using the actual activity level, but the costs and the prices that you already forecast. So one of the advantages I would say for using flexible or flex budgets are that easier and more accurate comparison of actual results. Another advantage is that management has better knowledge of cost behavior and therefore what impact changes in output have on total costs. So better knowledge of cost behavior and its impact on the cost. Disadvantage, I would say, is that many costs are fixed. So little value is added through flex and flexible budgets. And sometimes there could also be difficulty in identifying fixed and variable costs. Some businesses have different structure where it is not possible to identify the fixed and variable cost. So these are the three types of budgets. Moving on, there's also something called rolling budget. Now, what are rolling budgets? A system of budgeting where the budget is continuously updated. The budget horizon, typically 1 year, constant by adding another month or quarter to the end of the budgeted period. So, for example, if I'm making my budget for FY25 and I have made it from Jan to December for one entire year. Now I am standing at Feb. So now what I'll do is Feb 25, I'm gonna make my budget for March 25 till Feb 26. So that's how my budget will have rolled on 2 more months that are Jan 26 and Feb 26 because my 2 months of Jan 25 and Jan 25 have actually. So that's how a rolling budget works. Now, for which sort of organization the budget is suitable? It is suitable for slow-paced organization. Why? Because the budget is rolling, so you have to have a 12-month insight of what will happen in the market. If it's a ever-evolving dynamic market, then you won't be able to recalculate the budget every year. And for any area of the business that needs tight controls, since the budget should be more realistic. Okay, these 2 points are like really, really important because whenever you have a business case to understand, you'll ask if this budget is appropriate, then you will have to give reasonings why it is not appropriate, why is it appropriate. And these are the points that come in really handy. I'll also mention some of the advantages of using rolling budgets. So the first advantage will be that there'll always be a budget for next 12 months. Forces the management to take the budgeting process more seriously. The budget is updated and assessed regularly. Also, the budget is continuously updated to reflect external changes because you have to keep adding on another and hence it is more relevant and valid for comparison. So you can say that more relevant and valid for comparison. It has a few disadvantages also. The entire process is pretty time consuming. You have to spend at least a couple of days every single month to prepare the budget. What happens that the budget can be changed to hide inefficiencies. Sorry for my spelling. Efficiencies. Another disadvantage could be it doesn't work if the business environment is unstable. So whenever you are assessing a budget, make sure you know some advantages and as well as the disadvantage. You can evaluate properly. Another type of budget is an incremental budget. How does this work? Is that the process start with previous year's budget or actual results. Incremental amounts are added to the bracket to cover any known changes in the business or who is it suitable for? It is suitable for businesses in which costs are expected to increase significantly. There is good cost control and there are limited discretionary costs. What are discretionary costs? These are hidden costs. You have to make sure that whenever you're evaluating a business case and they talk about, okay, this is the cost that has not been added into the financial statements, and you immediately click that, okay, this is a discretionary cost. And if there are discretionary costs, that you can't use this incremental budget. Okay, coming to the advantages of this budgeting method. So as stockholders are acceptable, only increment needs to be justified. Increment needs to be justified as historic figures are acceptable. They are easy and quick to prepare, more time consuming. What else? Works in an environment where there's good cost control. We already work if good cost control. What I mean by this is that you have fixed number of suppliers, you have proper contracts, and the prices are not likely to change. For disadvantages, I think I should change the color. Okay, so disadvantages, I would say that it is also backward looking in the sense that modern business environment is more dynamic and making this approach is suitable. Modern business environment is not stable, that's what I meant. Um, Necessary costs will remain because they were in previous year's budget. Uh, Another disadvantage could be that it does not encourage a detailed examination of where improvements can be made in the budget. here are three advantages and three disadvantages. I like to apologize for my handwriting. Then zero-based budgeting. Very used method of budgeting. This is one of the methods of budgeting that most of the businesses are using these days. So it requires each cost element to be specifically justified as though the activities to which the budget relates be undertaken for the first time. So without approval, the budget allowance is zero. So you have to make sure every single activity is justified. So the thing is that this budgeting attempts to overcome the weaknesses inherent in incremental budget. Namely that some spend is included in a budget because it was in previous year's budget, regardless of whether it is useful or not. Zero-based budgeting requires the managers to plan what projects they wish to do and base budgets around those projects. So the process starts with the assumption that budgets for the following period zero. Um, it determines the activity that will be used in the objects of a decision package. Budget holders prepare a decision package for each program, which includes the goal of the program, the level of funding required, the benefits. These are the three things that you must know. All the consequences to the company department not performing programs. Senior management, usually a budget committee, reviews the decision package based on predetermined criteria. They are ranked in priority for the allocation of funds based on their importance and fulfillment of criteria. Resources are allocated to departments according to the ranking of the decision package and approved and accepted for disbursement. So if the priority is high, most likely that you will be given the allocation. So it is for fast moving businesses and incremental budgets were suitable for a stable business. For allocating resources in areas of discretionary spending. So if you come across an organization that has some hidden costs, then this is the right budget to use. Public sector organizations, as they have strict constraints on the amount of funding they receive, and funding will be put to the best use. So these are the three sort of types of businesses where this budget is suitable. Um, to just name a few advantages, I think I can just mention them here. Um, it should reduce budgetary tax costs must be justified based on their related activities. Reduces budgetary slack. It is useful for discretionary spending. We already said this. In efficient and obsolete operation will be identified. Inefficient operations will be identified, and it leads to increased. This is zero-based budgeting. Staff involvement, which can eventually increase motivation. Potential disadvantages, I would say, will be very time consuming because you'll have to spend a lot of time on just preparing the budget, and budget holders, staff, and trade unions may feel threatened that they have to justify their existence, they have to justify everything doing. The ranking and selection of the package, the decision packages can be subjective, and the budgetary process may become too rigid, and the company may not be able to react. Okay, write this one. The company won't be able to react to unforeseen opportunities. So these are some of the advantages and disadvantages. If you want this in detail, then it's available in my notes. Okay, so another type of budgeting method is activity-based budgeting. It prepares budgets estimates using overhead costs derived from activity-based costing. It aims to bring a greater discipline to the process of budgeting overhead costs. These are the steps in ABC. Group production overheads into activity. Um, Identify cost drivers for each activity. Calculate an overhead absorption rate. This is also called OA. Absorb the activity cost in the product and calculate the full production cost. So this is also a commonly used budgets where there are multiple activities being performed and the organization wants to know how much cost should be allocated to every activity. Advantages of this budget would be that non-value added act can be identified. Um, Draws attention to the cost of overhead activities, which can be a large proportion of the total operating costs. And it can be used to identify critical success factors. Um, I think that's about it. And also, if you link this to environmental management, then another advantage could be that it can provide useful information for total quality management by relating the cost of an activity to the level of service provided. And speaking of disadvantages, it is complicated to allocate. Sorry, sorry, I'm not reading technology. So complicated. It is complicated and also expensive, and because you have to buy each activity, then cost drivers for each activity, and then calculate overhead absorption rate for each activity. So it is time consuming and complicated, and also suitable to large organizations that actually have multiple products and many drivers. So another reason is that sometimes what happens is that fixed costs do not vary with the changes in the volume of drivers in the product. So activity-based budgeting may provide information. Fixed costs will remain fixed and they will not change with the level of the activity. They are not variable, right? Also, yes, the cost of adapting information systems so that they can collect and process a large amount of activity and the cost driver information, and it can be difficult to identify their individual responsibilities for activities. So that's an overview of how the activity-based budgeting works. For activity-based costing, I will be putting up a separate video with some workings and examples that can actually apply all these 5 steps into a practical example and understand how this costing method works. Okay. Then we have budgeting and variances. So variances. These are differences between the actual and standard prices and actual quantities and standard quantities. So if you forecasted to sell 100 units and you actually sold 90 units, there's a variance of units. So you are 10 below the plan. Variance analysis is calculating and interpreting variances. You need to understand why this variance occurred. Why did you sell less? Why did you sell more? What were the drivers behind it? That's a variance analysis. Planning Variance is the difference between the original standard and revised one. They arise due to inaccurate forecast or stands in the original budget setting. So planning variance means there has been a fall in the planning stage. Operational variances are then the remainder due to of operation managers. So the difference between the revised standard and actual performance. Sometimes variance arise due to managers' negligence. That is what we call operational variance. And under these two sort of variances, sometimes the budgets have to be revised, but there are a few principles that need to be applied revising the budget. So if it is something outside the manager's control occurred during the budget period and the budget was not achieved, it should be revised. If in retrospect it appears the original budget was unrealistic, the budget may also be revised. Management should not revise the budget for high inefficiencies. Senior management should approve only appropriate budget revisions. So budget revisions are also allowed, but under a few circumstances. So that is all about budgeting, I believe. Yes, and I've explained different approaches to types of budgeting, approaches to budgeting, and there's also another really important topic called beyond budgeting. It's a new topic that has been introduced recently, and I'll be putting up a video very shortly on that topic also, and it will be explained in good detail. Thank you.